Hello, my name is Andrew Milligan. I'm Head of Global Strategy here at Standard Life Investments. I'd like to talk about our Global Outlook series, the past publication and actually the next publication as well, which I hope you will find of interest, all available on the website, of course. There's three themes in these global outlooks which I think are very relevant for investors at present. The first is the degree of political uncertainty we're seeing in the world. The second, of course, is the policy responses, for example, negative interest rates, a most peculiar phenomena. And then how investors are responding, real assets, for example, i.e. assets that will perform well in times of inflation. Let's start with the first of those, the political uncertainty we're seeing in the world. Now, there is a lot around. For example, we approach the US elections, and there's a referendum in Italy in October. But the issue that's been on everyone's lips, of course, has been the UK's EU referendum vote and the result of that. It was a major surprise for markets. Three thoughts that I'd particularly say about that. The first is that we very much see this as a process, not an event. It is going to be lasting years. The negotiations, for example. Secondly, it matters just as much for Europe as it does for the UK economy. There are major issues facing European policymakers in response to that vote, issues which were there already in relation to the centralisation of Europe or the deregulation of Europe, and the UK vote just adds to that. And thirdly, in terms of market positions, a lot could be said about where bonds should go, where gilts should go, where equity markets should go, but we are certainly of the view that sterling is likely to be a major shock absorber for the result of this, and we do generally expect sterling to be lower over time as it helps the UK economy to adjust to this unexpected decision. So, of course, this period of political uncertainty amplifies several of our major investment themes. If we go back to how we see the world economy performing at present, we do just see a period of moderate economic activity going into 2017. Growth holding up, helped by central bank actions, with very modest inflation and moderate earnings growth as well. This really encourages us to concentrate on one of our major investment themes, namely sustainable yield. The investors should be going out there trying to find the equity income, the property income, the corporate bond yield, which will provide them with the income that they need. But the emphasis really is on the word sustainable here. There are threats, of course, to corporate bonds, threats to equity dividend cover, and this has got to be thought about very carefully indeed to make sure that investment portfolios are well diversified as well as able to pick up yield in a world of low inflation and low interest rates. Now, we also see political uncertainty as creating an uncertainty shock. People, of course, are going to be unsure for really quite some time in the UK and Europe as to what the negotiations are going to be doing. Together with some long-standing structural trends, demographic growth, population growth, and for over a decade now we've seen some weak productivity. Trend rates of growth for many, many countries around the world have been coming down. This feeds into one of the major articles in our Global Outlook series, providing our forecast returns over a 10-year period for the major asset classes for the major economies. But it also comes through with another key message for us, a world of low numbers. When we start calculating this impact of low growth, low inflation, low interest rates, weak, if positive, corporate earnings growth, we do end up with some very modest returns over the coming 10 years compared, for example, with what we saw in the 1980s or the 1990s. A world of low numbers is something that investors have to become accustomed to, I fear. So let me end with some of the other articles from the Global Outlook editions, looking at a few of the other investment themes which our fund managers have particularly been concentrating on. I mentioned at the start the policy responses to this political uncertainty, this world of low numbers. One of them, of course, is negative interest rates. A number of central banks around the world have not just cut interest rates to zero, but gone into negative territory. So colleagues have been examining some of the implications of this for currency markets, for government bonds, especially the Japanese bond market in particular. In this world of low numbers, equity income does have its attractions, but you've got to choose very carefully indeed which particular companies, which particular sectors to look for. So our UK and European fund managers have particularly been concentrating on that in some of the articles. And the final theme is thinking about the benefits of private assets. Some also call them real assets, which can be linked to tangible items, say a building. So thinking about the benefits, for example, of real estate or infrastructure debt, or even private equity. An alternative way of investing in this complex world which we face.